Hey, what's up everybody? It's Academia and welcome to the channel. Understanding financial markets is one of the best things you can do for your future. Think about it. Once you graduate, you're gonna need money to do, well, pretty much anything. Today we're gonna break down this complex world into bite-sized pieces. We'll cover everything from budgeting and forecasting to navigating the stock market. Trust me, by the end of this video, you'll be able to impress your friends and maybe even your professors with your newfound financial knowledge. So grab your notebooks, put on your learning caps, and let's dive right in. All right, so you're ready to take control of your financial future? That's awesome. But let's be real, the world of finance can seem about as clear as your professor after a late night grading papers. But don't worry, we're going to break it all down. First things first, remember that finance isn't just about making a ton of money, although that's definitely a perk. It's about understanding how money works and using that knowledge to make smart decisions. Think of it like learning a new language. Once you understand the basics, you can start having conversations, or in this case, making investments. Over the next few chapters, we'll be your guides on this exciting journey. We'll cover everything from the different types of financial markets to how to identify your own financing needs. And the best part, no boring lectures or confusing jargon, I promise. So whether you're a future Wall Street wolf or just want to finally understand what your econ professor is talking about, this video is for you. Okay, let's talk about something we can all relate to, money or the lack thereof. As students, most of us are working with a budget that's tighter than our jeans after a Thanksgiving feast. But here's the thing, budgeting isn't about depriving yourself, it's about making your money work as hard as you do. The first step is to track your spending. Yeah, I know, it sounds about as fun as watching paint dry, but trust me, it's eye-opening. Use an app, a spreadsheet, or even just a notebook to see where your money is actually going. You might be surprised by how much those daily coffees are costing you. Once you know where your money is going, you can start creating a budget. This doesn't have to be complicated. Just a simple plan for how you're going to spend and save your money each month. And here's the key. Stick to it. Now, let's talk about forecasting. No, we're not predicting the weather, but we are trying to get a sense of your future finances. By forecasting your finances, you can start planning for the future. Need to save up for a down payment on a car? Want to graduate without a mountain of debt? Forecasting can help you make those goals a reality. Let's talk about cash flow, people. You know, that beautiful feeling of money coming in and, unfortunately, the not so beautiful feeling of it going out. Managing your cash flow is like walking a tightrope. You need to maintain a delicate balance to avoid falling flat on your face. Think of it like this. You have your income, right? That's the money coming in from your part-time job, your side hustle, or maybe even those generous holiday checks from your grandparents. Then you have your expenses, those pesky things like rent, food, and let's not forget about those student loan payments. Cash flow is all about making sure you have enough money coming in to cover your expenses and ideally even have some left over to save or invest. Because here's the thing, even if you have $1 million idea without positive cash flow, it's just an idea. Now, how do you manage your cash flow effectively? Well, it goes back to budgeting and forecasting. By understanding your income and expenses, you can start to see where you might have some wiggle room. The bottom line is this: cash flow is the lifeblood of your finances. All right, let's dive into the exciting world of financial markets. Now, I know what you're thinking. Financial markets sounds about as exciting as watching grass grow. But hold on a second, these markets are where the magic happens, where companies raise capital, investors make or lose money, and the global economy keeps ticking. Think of it like a giant marketplace. But instead of selling vegetables or handmade crafts, we're talking about stocks, bonds, currencies, and all sorts of other financial instruments. It's where supply and demand meet to determine the price of these assets. Now, why should you care about financial markets? Well, for starters, they play a crucial role in our everyday lives, but more importantly, understanding financial markets can empower you to grow your wealth. So buckle up, because things are about to get interesting. In the world of finance, it's all about who has the money, right? Well, not exactly. But understanding where companies go to get that money is crucial. That's where private and public markets come in. Think of it like this. A private market is like an exclusive club. Only accredited investors, wealthy individuals and institutions get to play there. They invest in companies that aren't yet publicly traded, like startups or small businesses with big potential. Public markets, on the other hand, are like a giant flea market. Anyone can participate, from seasoned investors to college students just starting out. Public companies like Apple or Amazon have their shares traded on exchanges like the New York Stock Exchange or the Nasdaq. So, what's the difference? Well, private markets offer the potential for higher returns, but they also come with higher risks. You're investing in companies that are still in their early stages, and things can get a little bumpy. Public markets, on the other hand, are generally considered less risky. Let's talk about the stock exchange, the beating heart of the financial world. Imagine a giant auction house where companies go to sell pieces of themselves to investors. That's essentially what the stock exchange is all about. Companies need money to grow, right? Well, instead of taking out loans, they can issue stocks, which are like tiny slices of ownership in the company. Investors, both individuals and institutions, buy and sell these stocks on the stock exchange, hoping to make a profit. Think of it like this. You buy a share of Apple stock. You're now a part owner of Apple, albeit a very small one. If Apple does well, its stock price goes up and your investment grows. The stock exchange is where prices are discovered, where supply and demand meet to determine the value of a company's stock. It's a dynamic and exciting marketplace full of opportunities and risks. Let's talk about the efficient market hypothesis, a theory that's been debated by economists and investors for decades. In a nutshell, it argues that stock prices already reflect all available information, making it impossible to consistently beat the market. Think of it like this. You're trying to outsmart a supercomputer that has access to every piece of information imaginable, from news headlines to financial statements to even rumors circulating on social media. According to the efficient market hypothesis, this supercomputer has already processed all this information and determined the correct price for every stock. Now, before you throw in the towel and give up on investing altogether, let's be clear. The efficient market hypothesis is just that, a hypothesis. There's no guarantee that it's always true, and there are plenty of investors who have consistently beaten the market. So while you might not be able to consistently beat the market, you can certainly make smart investment decisions that align with your financial goals. Now, let's dive into the world of AIM, the alternative investment market. It's like the little sibling of the main stock exchange, a place where smaller, younger companies go to raise capital and grow their businesses. Think of it like this. You have your established blue-chip companies on the main market, the Apples and Amazons of the world. Then you have AIM, where you'll find companies with big dreams and even bigger potential. Investing in AIM companies can be riskier, as they're still in their early stages of growth, but it can also be incredibly rewarding, as you're getting in on the ground floor of potentially the next Google or Tesla. AIM companies are often involved in innovative industries, from technology and healthcare to renewable energy and biotechnology. So if you're looking for high growth potential and aren't afraid of a little risk, AIM might be the right playground for you. Now, let's step outside the realm of public and explore the exciting financing. Because let's face it, a company wants to go public and not everyone can play the stock market. Think of it like this. You're a startup founder with a brilliant idea. You need funding to get your go public just yet. What do? Well, private markets, where you'll find a whole ecosystem eager to back promising ventures. From angel investors and venture capitalists to private equity firms and family offices, there's no shortage of capital available for the right opportunity. These private investors bring more than just money to the table. They often have deep industry expertise, valuable connections, and a wealth of experience that can help startups navigate the challenges of growth. And there you have it, folks. We've covered a lot of ground today, from the basics of budgeting and forecasting to the complexities of financial markets and private financing. Remember, understanding finance is a lifelong journey, and the more you learn, the better equipped you'll be to make smart financial decisions. So keep exploring, keep learning, and never be afraid to ask questions. Because when it comes to finance, knowledge is power. Until next time, happy investing.